Good afternoon. My name is Campbell McCrary, Vice President, Capital Markets at Amvest Capital. Welcome to the Amvest Capital Inc. live webinar with Viva Gold Mines. Viva trades on the TSXV as VA Venture as VAU and on the OTC as VAUCF. Victor Alpha Utah Charlie Foxtrot. We hope you'll enjoy today's program. It will also be available in replay mode. Feel free to chat in your questions in the question pane of the GoToWebinar control panel, or simply email them in, and we'll ask them live in real time. Very important. Amvest Capital is a New York-based investment management, advisory, and corporate access firm for the natural resource sector. Of course, this call is for informational purposes only. We have with us today Jim Hesketh, who's the CEO and director of Viva Gold. Jim has over 35 years of experience in mining company positions, including over 12 years in public company CEO roles and positions in mining, finance, business development, and mine engineering, development and operations with companies including Atna, Canyon, Rothschild, Cypress, Amex, Minerals, Pincock Island, and Holt Dresser Industries. He holds a BS in mining engineering and an MS in mineral economics from both from the Colorado School of Mines. He has taken 8 mines into production. Following the formal presentation, members of Amvest Capital will be asking questions of management. Again, we hope you will shoot them in to us, and we will incorporate them into the Q&A part of the program. With that, welcome, Jim. How are you? Oh, Jim, you got to unmute yourself.
Thank you very much, Campbell. You're doing very well here.
Yeah, we can see and hear you. So off we go.
Okay, so you can see the presentation. Okay.
Yes.
Yep. All right. So Viva Gold. We'll give you a quick overview. We're going to talk today about our management team and board, our tight capital structure, 39.2 million shares outstanding, where we trade, and why we believe that we provide substantial value for investors in the company. In terms of the Tonopah project that we'll talk about, we own 100% of it. It's located on the very mining-friendly Walker Lane Gold Trend in western Nevada. The deposits remain open, both along trend, and we see significant exploration upside potential. In addition, we have outlined a high-grade starter pit. It drives very rapid payback. The starter pit, according to the PEA economics, will essentially pay for the operation. We see the pit size. The PEA was completed at $1,400 gold, but at $1,600 gold, we add about 50% more ounces in that increment to the pit design. We're looking at a low capital, open pit, heap leach investment opportunity. And the site enjoys truly great infrastructure. We have paved road access, power and water in close proximity. So moving on, this year we started at a very low level of valuation, and we've grown. We've outperformed both gold and the Gold Miners Index. So we're ahead of our peers, but we believe that we still remain substantially undervalued and hope to make that case today to you. So very quickly, the capital structure, 39.2 million shares outstanding, fully diluted about 58.5. We've got a number of warrants that will expire in October and November, so we're hoping to bring those in as partial financing. We did close a $3 million financing in the month of July, and we're currently operating drills on the site. So we'll discuss that a bit today also. terms of management team and board, got a very experienced team. Chris Harold, our chairman director, he's a very savvy geologist, been in the business over 40 years. His experience included 12 years as director of the Denver Gold Group. A lot of you have probably attended the conferences, but Chris is a well-known person in the industry and provides excellent support. Myself, I'm a mining engineer and mineral economist by training, and over 40 years experience also. And as Campbell had mentioned, I've been experienced in building a number of mines. The remainder of our team, Steve Krause, Gary McDonald, very strong financial and business individuals with solid experience. Ed Mahoney, he was chief geologist at the large-scale Kinross Round Mountain Gold Mine, which is about 30 miles north of our site at Tonopah. He's providing some excellent geologic input with strong knowledge of the local geology. David Whittle recently joined our board. Very strong, experienced individual, both in CFO and CEO slots, and both underground and open pit. So strong team, professional mining team. Tonopah project overview. Quickly, we acquired the project, 100% of it in 2017. We did acquire from the bankruptcy estate of Midway Gold, so we received a totally vetted and extremely clean asset, being cleaned through the courts. Former explorers on the project include Core Mining, Rio Alto, Kennecott, Newmont, and Midway. From them, we've inherited a massive database of information. Kennecott drilled over 130 drill holes, Newmont about the same. Newmont's operation was as part of a portfolio program along a broad swath of the Walker Lane trend. And then Midway Gold did considerable amount of drilling, and they were focused on developing the small high-grade underground. As part of our acquisition of the project, we were able to restructure the royalties, reducing what was a very onerous index royalty that reached 7% NSR at $700 gold. We reduced that down to a 2% flat royalty with a 1% buyout option, no advance royalty payments. So we have a very strong, well-controlled asset, no obligations on it whatsoever other than our annual claim fee payments to the US government. So very quickly, very simple geologic overview. We have a gold zone. It's associated with an unconformity, which is just a boundary between a very old rock, an argillite of Ordovician age, and a very young rock of tertiary volcanics. And the gold-bearing solutions came up through the argillite, hit the contact, and disseminated along the contact, as well as blew explosively into the volcanics and created veins and breccia pipes. And you'll see a little bit of that, but we have both disseminated as well as concentrated vein type mineralization on the project. So enough geologic overview. When we look at the project, there's a series of structural settings, and the gold is always associated with these structural faults and junctions of faults. What we're showing here in the light green is 0.15 gram per ton grade shells, and those are associated with the faults and the junctions. As I said, the west fault is virtually undrilled. We've got a limited amount of drilling there. And let me bring in the leapfrog model of this
Jim?
This shows the mineralization in association with the pits. And as you can see, we've got one zone to the south that's following in more of a east-west type fault trend. We've got a bounding fault that goes along this east side, which is really the Rye Patch Fault. And then we've got a northwest trend through here that helps to drive the mineralization. When I turn the pits off, let me just do that here a second. You can see that we've got much larger mineral zones than we do the pits. And as we're looking at it, the core of this is primarily measured and indicated. I just turned off the inferred mineralization. And then this is your with inferred material. We are currently drilling in the inferred zones. And let me tip this up if system's being a touch sticky here. But you can see this is kind of a cross-sectional view. And what makes this project so attractive? Let me put the topo on here very quickly. Yeah, I covered it all up, but we'll take a look underneath. It's very flat terrain, and the mineralization is essentially more or less flat laying, and you have, it comes to very close to surface, within 10 meters. That's what excites me, is that the center core of this deposit, very well drilled, and it comes to within 10 meters of surface. This was designed to be an open pit by its emplacement. Works out very well, and that's where I say the starter pit. Let me bring this top. The starter pit with these red cores here, this is greater than 2 gram material in the blocks, comes right to almost surface. And that's what we're really targeting for our starters. And then our current drilling program, we're extending to the northwest, to the southeast, and then we're doing a lot of work to the south here as well in these southern zones. And that's because these pits here were primarily inferred material. Other things that I like to see about this deposit, and let me turn off that measured and indicated, and I'll turn on the grade shells. This is the 0.15 gram per ton grade shell. This is the Midway Hills. This is the West Fault that was in that one presentation slide. And you can see that we have intercepts along it, but very few drill holes. Other areas with limited drilling, some of these gaps in the center of this deposit, look here, virtually no drilling in the middle here. Along this structural trend through here, we're missing holes in here. To the south, this is all defined by 3 or 4 drill holes. Big gap in here. So what we see is a project that has significant upside as well as a very well drilled high-grade core. And that's the key to this. Let me turn off the 0.15 grade shell. And these are 0.8 gram per ton grade shells. And you can see the main trend moving northwest, and the high grade zones are actually at a slightly different orientation than the main trend. That is still some work that we're analyzing, is this how we can take advantage of these trends. And these holes that are shown here are holes that we're currently drilling. We've drilled TG 11, 8, and 9 so far. We've also drilled on the eastern end. We've drilled holes 10, 13, 6, and we're currently drilling hole number 5. We've sent in 3 of the drill holes for assay. But that work is slowed down right now due to basically the labs are overwhelmed, partially $2,000 gold price, partially COVID. Nevada had declared the Nevada labs to be part of a critical industry, so they stayed open. And as a result, they drew samples from all over North America, as far as BC and as south as Mexico. And they all hit the Nevada labs. And that's what's creating a 35 to 40 day lag time right now. So we are expecting assays on our first 3 holes before very long. And then we've sent in this week an additional 3 holes for more assay. This next slide, we have the high-grade zone, very well-drilled zone. We've got the Midway Hills. We've got about 1 kilometer in between the two with very limited drilling. That's part of the upside that I was discussing. Midway Hills is not part of our resource base at this time. So when I discussed earlier the geology, where we had both high-grade vein type and more disseminate type mineralization, you can see that in our drill results. We get assays like this, the 1.5 grams at 50 meters. But here we've got 100 meters at 1.3 grams. That's our more disseminated type mineralization. So Tonopah is what they call a bimodal system. There's 2 different populations of mineralization, both high grade and low grade. And that figures quite prominently into the high grade cores of the deposit, where you always get a high grade center surrounded by lower grade material. And that provides a distribution of profit potential throughout a mine life, which is very positive. Anyway, the total resource that we're looking at, around about 500,000 ounces in measured, indicated, and inferred, with 42% of the total ounces being above the 1 gram cutoff grade in the sensitivity analysis. So that demonstrates the high grade nature of this deposit. You saw in the leapfrog model the plan view of the $1,600 pit. And this is the long section. This high grade core is the starter pit area that we talk about. The magenta color is greater than 3 grams. And that's within, it starts within 10 meters of surface. So very, very well-defined target for open pit mining there. And that's what creates the potential for a feasible operation at this point in time. And we've demonstrated that through a preliminary study. We're moving on to feasibility. And we're also stepping out on our drilling to add to mineralization. So in terms of looking at the PEA, this is the $1,400 design case. We did highlight a $2,000 economics here because that's been kind of the price range lately. At the current market, very high returns, 1.5 year payback, 67% return. Fairly phenomenal for a small deposit of this type. Anyway, that's the potential that we see here, is a very high return, high payback project that can be built simply and quickly. So here's the layout and design. The ground around the project area is quite flat. It's a dried lake bed, and that's the potential. So the cash costs that we're looking at, about $750 an ounce, all in sustaining just over $1,000. $1,400 project life is about 6 years. $1,600 project life is about 9 years. And we'll be working on extending that. And we do see increases in the ounces contained with price. So in terms of the environmental, social, et cetera, this project, we already have a completed environmental exploration level environmental assessment and a cultural resource study. That was done by Newmont in 2003. We have commissioned a group to update the archaeologic cultural study, so that's underway. The exploration is permitted under a plan of operations, which allows for up to 75 acres of cumulative disturbance. So far, we've disturbed about 9 acres. We've got paved road access. We've got well fields belonging to the town of Tonopah, limited pumping to the south of us and up drainage into the east of us. Those were new wells, the eastern wells drilled in 2012. In addition, we've got supply trains moving past us every day. This road in the background is a paved highway that goes to the Round Mountain mine. We're in between 2 supply depots there. One is in Vegas and one is in Round Mountain for both CAD and Komatsu. So those are definitely upsides for quick development of a project. In terms of the metallurgy, we've performed initial level column leach tests, bottle roll tests, and we can demonstrate a weighted average recovery of about 71%. We've recently commissioned Kappas Cassidy in Reno, Nevada. They're developing a optimization metallurgical test program for us, and we'll be moving forward with a core drilling program commencing in September. We'll drill about 5 PQ holes to help move capture sample for environmental studies as well as metallurgical study. So our current drilling program, we are drilling to the northwest and to the east. These holes in the center are metallurgical holes, and we're on hole number 7 of that RC program. And that is to upgrade and extend our inferred resource, upgrade it to indicated level. The TG holes are all focused on extending that mineralization. The TM program, those are Tonopah metallurgical core holes. And that'll start in September. In terms of technical studies, as I discussed, we've metallurgy, we've retained KCA out of Reno. We've also retained Colin Nicholas out of Tucson, Arizona to do a geotechnical study, and that's to optimize pit slope angles. The PEA used 45-degree generic slopes. We have to develop more detailed slopes, and a few degrees in additional slope angle will significantly reduce both the cost and the strip ratios at this site. So they're moving ahead. We do have in the database a tremendous amount of data that was developed by both Midway Gold and Newmont. That includes over 30 oriented core holes. For us to repeat that work would probably cost a good $5 to $10 million. So we definitely have a leg up there. The hydrology, Pateau Associates has been retained, and that's to develop, they're initially consolidating an extensive database of geochemical and hydrologic data that we have. We've also been supplied data from the Tonopah Public Utility and from the state of Nevada. So we have a massive amount of data to work with. And that again gives us a leg up. That's work we don't have to recreate. And then the archaeologic study. And all of this is to drive towards feasibility in early 2021. So why Viva? What are our value drivers? Our management and board, we're very experienced. We know what we're doing, and we built mines and been involved in mine building and financing over time. Viva Gold, well-capitalized structure. We have had a strong focus on managing our dilution. We've maintained that strong capital structure through the down cycle, and we have no debt in place. So those are all key points. We own 100% of our project. It's a well-drilled development opportunity. There's a high-grade starter pit that'll drive rapid capital payback. We have robust initial economics, and we've got fast-track permit potential. This is Nevada, and that's a strong point that we have over virtually anywhere else in the world. We can say we can move quickly, and we're dealing with regulators who are highly experienced, well-educated, and are extremely professional and know what they're doing. And that's actually a strong benefit in terms of permitting a project. So in terms of timelines, drill results, we'll be seeing those in the third and fourth quarter of this year, delayed somewhat by the backlogs on the labs. Technical study results, those will be completed through the first quarter of 2021, fourth quarter of 2020. Feasibility study to commence in the first to second quarter 2021, and then initiate permitting in the second half of 2021. So that's really our game plan. Taking a look, here's a peer group analysis. Won't dwell on this, but we believe that we're undervalued by most every metric. That includes our market capitalization and our enterprise value per measured and indicated ounce. So that's the end of the prepared presentation. Do we have any questions?
Matter of fact, we do. So let's start with this. Hasbrook is next door, controlled by West Vault Mining, formerly West Kirkland. Any synergies in combining the assets or something like that?
Well, yes, there's always potential of tying up with your neighbors. And I believe that does provide synergies in terms of managing overheads, reducing infrastructure and supply chain needs. Those are all key points. And, at this point in time, everybody's talking to everybody. We're in a $2,000 gold market.
Got it. When can we expect to see the first results from the drilling program?
You're breaking up a little there.
When can we see the first result from the drilling program?
Well, I've been expecting the assay results anytime. I checked in with the labs yesterday. We're not very far out for the first 3 holes, maybe within a week.
Thank
maybe
you.
2 weeks. Yeah.
Yeah, so on the drilling, you were mentioning there was a backlog, obviously, because gold price and activity in Nevada, but companies were sending results, assays from Mexico and other areas too. Is that right?
Could you repeat that question, please?
No, I was just saying, you mentioned that you're having delays in drilling and the assays, and that wasn't only just due to increased activity in Nevada, but higher activity in other parts of the world, such as Arizona and Mexico, and companies operating in those areas sending assays to Nevada. Is that right?
Yeah, that's correct. And that's created a wild card in terms of timing.
Interesting. So did Mexico shut its labs down, did they? So those, okay, I was wondering if those areas had completely shut down their labs. But it sounds like they were.
Yeah, in some places labs were shut down as non-critical.
Got it. Fair enough. Do you expect a delay in between the batches? So you mentioned you might get the first 3 holes soon, and then the next batch, would that be a further 3 holes?
Yeah, we are looking for kind of 3 hole batches right now. And yes, we are getting delays in between. Plus, it's we've had an extremely hot August in Nevada, and that slowed the drilling down a bit.
Yeah, fair enough. Thank you.
Thanks, Jim. In the leapfrog model, you were showing some potential upside. Can you talk to that? Sort of where do you think order of magnitude this is based on, elevated gold price and what you think is there, closing in those gaps that you were discussing?
Well, the drilling we're currently doing, it's anticipated that'll help to close some of the gaps. But we still have a lot of room left to fill in additional gaps and to continue to expand the resource. That's one of the true upsides that attracted me to this project. So, I view that as something that we'll continue to do throughout the feasibility period and beyond. We'll continue to add to this resource.
Okay, and is this something that could be 1 million ounces, or is this a 3 million ounce deposit, or is this, what is this a district play?
I always believe that this is a 1 million ounce plus deposit.
Okay, great, thank you.
And
just on the met testing.
If we look at the unconfined beds.
Hey, Jim, maybe talking to the laptop. That's where your microphone is. That might help.
Or you can turn the video off too. It could be the connection.
Go ahead.
Campbell, maybe better if you turn the video off. What do you think?
Yep.
Yeah, okay. Can you hear me, Jim?
Yeah, let me change my setup here.
Bear with us. Thank you.
Okay.
Okay.
Okay, let's keep going.
Yeah, are we still online?
Yeah, we're still
There we
on.
go.
So Jim, I was just going to ask about the met results or the met testing you're doing, the current
Okay,
drill.
so what was the question?
The question was around the met results that you are, or the met studies that you are undertaking, if any, and is the core that you're sending to the labs now for assay, is that also core you're using for met work? Can you talk to that?
No, we're currently doing a RC program, and that program produces chips. We'll commence a core drilling program in September, and that'll be dedicated towards the metallurgical work.
Got it. And just if I could just follow that on with what parts of the pit are you going to be targeting for that work in September?
Okay, the metallurgical drilling will be conducted in the core of the deposit, where we know we've got extensive zones of mineralization. So that won't add to resource, but it'll we have to drill for metallurgy where we know we've got mineralization. So it'll be a good demonstration of the potential of the deposit.
Thank you. Artie?
Hey, Jim, when we look at the plan view on page 12, can you tell us where is the starting pit and how easy to blend the material to the leachable grade?
Well, realistically, we have two major rock types here. So blending is not going to be a difficult issue. You typically run several pits simultaneously or several working phases, and that'll be part of the ultimate feasibility design work. And, you know, that'll be targeted to blending metallurgical characteristics.
Okay, and if you can move to page 13, there are some intercepts that we can see as a higher gold grade. They are below the current pit shell. At what price of gold do you think those can get into pit shell, and pit shell can go deeper than that?
Yeah, the high grade starter pit starts to pull at about $600. So it's a high value starter. You know, and that's the key here, is that's what'll drive rapid payback economics. And when you're in a price cycle like this, the important thing to do is to have the mine up and operating before the price starts to turn around, and you can achieve payback, i.e. pay off your debts, construction debt, rapidly. And that would be the goal here. And that's how you start to build a company. And, you know, we're likely to get some interest in the operation from other parties too. So, you know, the drive here is to add value, and that's shareholder value.
Can you please move to page 13?
Can you say that again, please?
Can you please move to page 13?
13.
Yes, I can see some magenta colors below the pit shell, $1,600 pit shell. What do you think about the possibility of this pit shell getting deeper than the current one?
Yeah, our current holes, the number of the holes we're currently drilling are targeted to drive the bottoms downward. And so we're currently testing that potential.
Okay, and lastly, I want to ask you about this high pressure grinding rolls. What are your expectations from those tests, and is it for energy savings? And can you comment on the hardness and the strength of your feed that you are sending to the crushing cycle?
Yeah, this deposit would be characterized as medium to low hardness. What high pressure grinding rolls does is it creates microfractures in the rocks, particularly where it's lissified, and provides the potential for fluid channels. And in deposits where high pressure grinding rolls have been used, there's a potential there for anywhere between a 2 to a 5% uptick in recovery on a heap leach where it's amenable. Okay, that's not every deposit, but it's shown in enough projects now that it has a positive value. The other component of high pressure grinding rolls is that they've actually proven to be very efficient from a maintenance viewpoint, low maintenance cost. So that's the real reasons of driving forward on that is recovery enhancement and cost reduction.
Okay, thank you.
Jim, who are your investors? Any institutional? And do you have any analysts following?
Yeah, we have Rad Capital and is our largest shareholder. They're out of London. We do have a gold fund, one in Boston and one in New York that are also large shareholders. So we've been starting to attract now the more institutional investors that we did not have in before. So that's been a key. So that in terms of analysts, so far we've been picked up by newsletter writers, and we've been doing interviews with a number of online groups.
Thank you. Do you foresee any issues with obtaining water rights for the project?
No, I don't. We're right next to a public water utility for one. So we have the ability to buy water.
Are you thinking about rerunning the pit at $1,600 or $1,800 gold? And what impact would that have on production costs, total NPV?
Well, in our last PEA, the base price was $1,400. And we did include in the PEA a sensitivity $1,600 design case. So that is in the PEA. And any increase in gold price here is going to increase the resource. We do have a substantial number of ounces that are not in the pit shell.
Okay. How much does management own of Viva?
What's that?
How much does management own of Viva Gold?
We own directly. I own about 2 million shares myself. Management's got about 7% of the company right now.
Okay, thank you.
Just back to Campbell's point on water, and I guess the nearby town, how competitive is it in that region in terms of water demand?
Well, there's ample water supply in this region. It looks like a desert, but there's substantial subterranean water flows. You know, we are going to have to dewater this pit. And so that's part of the hydrology studies that we're working on now. And that's endemic throughout Nevada. You see everywhere you go, there's water, but it's subterranean.
Yeah, I've got it. And then due to, you know, the high gold price environment and a lot more activity in the area, you've commented on the assay labs being busy, but how have you found access to people and access to drill rigs for, you know, the next drill campaign?
Well, first and foremost, we're very close to town. We're only 20 miles outside of town. So the drillers like to work for us. They can go to town at night and it's not a long drive. You know, and that tends to work magic in terms of getting both people and drill rigs.
Yeah, fair enough. And Midway Hills, you know, when it's been talked about for a while, and it seems like a very interesting area. When do you think you'll be able to get to drill it?
Well, we've got them now, and you know, we haven't had an issue getting drillers.
Yeah. And are you planning on drilling in between the Midway Hills section and the current pit?
Right now, what we've identified is a substantial number of targets around the existing main core area. We have done some drilling between Tonopah, you know, our core area, and Midway Hills with some success. That's a future target for us.
Got it. Thanks. Gabe?
Yeah, can you just confirm the met core holes that you were discussing in September are going to be within the current pit shell?
Yes, they are.
Okay, thank you.
They'll be entirely in the pit shell.
Okay, thank you. And the infill drilling that's planned in the pit boundary, inside the pit boundary, what are you kind of touched on it when I asked the first time, but about kind of stitching some of those pieces together. What's the aim of this sort of, you know, these first two batches of holes that are going to come to market?
Yeah, they are inside the back slopes of the pit.
Mm-hmm.
And what we're doing is drilling on the edge of the inferred material. And that is to upgrade the inferred to indicated. Keep in mind that in a feasibility study, you only get proven and probable reserves from measured and indicated resource. Inferred does not translate into a reserve. So we're adding to the reserve, and by drilling on the edges, we're also extending the zones. So that's the key point: upgrade and extend. And that's going to be our methodology, is to continue to step the whole zone outwards.
Okay. And are you going to be drilling, you know, approaching that 1500 level that we see here on the map, or how deep are these holes?
They're typically we just drilled 3 holes that were about 250 meters. So we are going with deeper holes, mainly because we're targeting trying to push the bottoms downwards in these zones. So
Exciting.
It's upgrade, expand, and deepen all at the same time.
That's great. Okay, thank you. Marty?
In your opinion, which process would have the longest lead time when you look at all development efforts of the project? Do you think it's like studies?
Yeah, the actual mining components are fairly rapid. Really, your longest lead times come into you know, some of the permitting functions. Waste and ore rock characterization, they're long tests. They take a long time to complete. Those are humidity cells, things like that, where you're testing for acid drainage. Baseline water studies. We do have baselines from historic. We're having to add to those, and there's a certain amount of time people want to see. Environmental studies for the wildlife and the fauna, flora. we need to do those in the spring during the mating season. So, that pushes some timelines outwards. So, those are the biggest lead time items. Mine design, stuff like that, very quick and simple to do.
Thank you. Approximately what portion of the total mineralized zones followed up with the drilling until today?
Could you say that again, please?
Like, what portion of the total mineralized zones that you discovered followed up with the drilling so far today in the project?
We're probably, again, the core of this is already drilled and measured and indicated. That's about 70% of the mineralization. So what we're doing is following up on the remaining 30% to upgrade that and expand it. So that's the key point, is we're drilling on the margins and expanding the system.
Okay, thank you, Campbell.
What's your burn rate, and how long will the $3 million last, and when do you think you'll need new capital?
Well, our current burn rate, we'll probably be looking for additional capital later this year, possibly starting in October and or the spring. Part of what the driver there is, we have a number of warrants that become exercisable in October. We also have more warrants that expire in October and November. So there's going to be a drive here to try and bring some of the warrants in, and that's an inherent financing in itself.
Okay, thank you. We've reached the top of our hour. I want to thank everyone for tuning in today to Viva Gold. And we cue you for feedback. We really appreciate you sending us some information about what you thought of the company and the format and anything that is on your mind. With that, turn it back to Jim for a closing statement and why we should buy some shares in the morning.
Yeah, well, thank you everybody for coming today. It's been a pleasure, and keep an eye on Viva. I believe very strongly that we have the potential for adding significant value to this company through both our drilling efforts as well as our feasibility study work moving forward. And I believe that we're well structured to move the whole company into that value-added state. So to us, it's about the shareholders and it's about adding value.
Okay, thank you. Good day, everyone.
Thanks, Jim.
All right, thank you, everyone.